No. We'll do that one. Hold on. 1 second. Okay. We are live. Oh, let me get this. How was everyone's Christmas? Joyous, lots of gifts. Oh, lots of family parties for me. So, got this new shirt. Living big. Wait, I'll show you my hat. I got a hat. Should I go like this? Is that good? We'll Oh, I look like a freaking I look like I belong in the outback. I don't know what you do. Do you pop one off? Okay, that looks weird. Well, it's supposed to be for like you can wash it. My brother bought it for me. Fun stuff. So anyways, I figured I tried to compile what I could try and keep this short because I'll try and keep this 30 minutes. So I tried to compile basically what I could find for market predictions from last December, January for this year. I kind of noticed it's hard to find articles predicting the market a year later. And I'm just like, do people delete this shit? Because I didn't find a lot, honestly. I Googled every variation of 2023 market prediction I could find. I went to different private equity and wealth companies, Reddit. And it's like, man, it's like no YouTube. Oh, you're not going to find much YouTube videos. I'm telling you, it's very suspect. And you think, oh, sure, everyone makes market predictions. Okay. So I thought this was a cool chart to start with. You probably can't. I know it's really small. So some of the different things that happened this year, I thought this was kind of, if you could culminate a year in the markets in one page, I have done it there. I hope you're happy. So started out doom and gloom. Everyone thought there'd be a recession, lows of everything. If you remember last year, currency crisis had just left. Everyone's like, oh, we're definitely going to be in a recession in 2023. It's definitely happening. So we'll show I found a few things. So here's how the market did and treasury yields, different dates on here. Let's see. So this was fun. Number 5, Silvergate Bank voluntarily liquidates. So that was during the March-April banking crisis. Oh, who can forget? Silicon Valley Bank fails. Number 6. That was right here. Lovely. What a day that was. Taylor Swift cakes. Why is that on here? Taylor Swift. OpenAI. Okay, that was a big trend. That was right here. Number 8. UBS. Who can forget? They bought Credit Suisse, that lovely quality bank from Europe. Yeah. Okay. LVMH, first company to reach $500 billion market cap in Europe. Well, good for them. Great company. JP Morgan takes over First Republic. What else? NVIDIA, blockbuster earnings report, kickoff AI hype. So 15. So you could see, so this kind of doom and gloom beginning of the year, we kind of went right into the regional bank, interest rate, whatever you can call it, crisis. Then you had NVIDIA at 15, which, midsummer. All of a sudden, AI became the story and the Magnificent Seven became the big deal and everything started to pop. So that was number 15 here. And then you can see that kind of led us almost all the way through this year, actually. So pretty cool. Oh, this is 15. I was on the wrong side. So this 15. Oh, yeah, cool. So Eli Willy. So what else? AI, the Magnificent Seven. We had the doom gloom of the regional bank crisis. We had Eli Lilly and Novo Nordisk setting crazy numbers for weight loss drugs. So those are kind of the big stuff. Oh, Barbenheimer was probably the cultural event of this year. I think that might have been it. Barbenheimer was when the Barbie Oppenheimer movie dual release was the biggest success in Hollywood this year, I think. So, and then you had strikes of unions all over the place this year. When the unions won almost every single strike that they did this year. So a year for the unions. Why are they going to put Hottest global temperature. Nobody cares. And then Hamas, Ukraine. So there we go. There's that. Um, who's this? Hope you had a Merry Christmas. I hit the 25K milestone in my Roth today. Oh, well done. Well done. Good job. All right. So we'll show this. So this is not complete yet because we're not done. We're done soon. So 2023 communication services, which is funny because if you look, it's like almost exactly the opposite of last year. It was dead last and minus 37. Now it's leading the pack in the sector 37. So it's interesting. Technology, consumer discretionary. That's okay. That's the average there. Energy. So you can kind of okay, what was terrible this year? You could say real estate, consumer staples, utilities. Um, I wouldn't really go past that. Something to keep in mind. These things tend to flip. No, so else? So very quickly, I looked at SPY and I looked at the articles on Seeking Alpha December 2022 to February 2023. I pulled a few, which were kind of funny. You could see now at the beginning of it, you could see like everyone's doom and gloom, hold, sell, strong sell. There's a few that were like, look, it's not so bad. Like this guy, CFA. I read a few of these. This dude is just lost. Like I looked at his, he's just lost in the clouds. Perma bear man, poor guy. He's all old and shit. Um, so this guy, oh, tough road ahead. Not so much. You didn't nail it, sir. Uh, so that's some of that. I pulled a few of these. So there was this guy, Dan Victor, CFA, 8 chart market bears don't want you to see heading in 2023. So he was actually positive about the market back then. And he thought that the recession wasn't necessarily cooked in the books. He predicted inflation rates were going to come down really fast and yeah, kind of. Job market is stable. This guy kind of called it. It really didn't. There was no crash in the job market. Some people kind of suspected as interest rates went up, they thought maybe there'd be some crash. Tech firms did layoffs, but that didn't. The economy absorbed it just fine. Um, so without getting nerding out on too much of this, valuations are cheap. So he called that to some degree as it worked out. Downside in interest rates. Okay, so there's that guy. This guy. Livy Investment Research. He said sell SPY and QQQ. This was December of last year. Getting slayed. Oh, how holiday-ish of him. Not a Merry Christmas for this guy, all coal. So he did the good, then he went right into the ugly. He basically was like recession bear. The looming. I love how they write the looming recession. It's inevitable. It's happening, right? Of course it is. You're all perfect. You're all perfect economist majors. From the one class you took, got a C plus in. So, oh wow, talk about money printing, dude. So let's see. The print still runs a whopping 3x higher. Oh wow, money printer. Burr. Inflate. Okay, yeah. Savings rates are up. Low unemployment. So why was he so bearish? Let's see. Boomerang inflation. There you go. Great term. Final thoughts. Despite consensus expectations for a short and shallow recession in the upcoming year, which is what so far has happened, the issue at hand is the market is not even there yet. Implies elevated vulnerabilities, further weakness. Oh my God, doom and gloom. Dun, dun. So let's see. Within 12 to let's see. Oh, the greatest recession indicator of all, of course, he cites 98% of CEOs expect a recession to hit the U.S. Oh my God, run away. In the next 12 to 18 months. Well, he's got 6 months to go. So he's still got time. Anyways. Wow. Oh, up 95%. These guys. Okay. We're not even gonna look at the comments. This guy I thought was hilarious. I am interested in small cap companies with highly optionality. Okay, he's like an option bro. That's adorable. He forecast a tough 2023 for the S&P back in December. So he goes and same interest rate. He's just like the economy's going to just keep dumping because of the Fed hiking interest rates, which didn't happen. It happened a little bit, but we recovered. Mr. Doom and Gloom. He forecasted depressed earnings. So there you go. A lot of sell and hold I saw. So this was they do this on Seeking Alpha. Uh, they do like a survey, I think, of authors. So this guy works for Seeking Alpha, and then they create like these charts. So this was the sentiment of Seeking Alpha authors at the close of 2022 into 2023. So you can see kind of all over the place. So you got 35% expected really high, 30% down. Average was about, let's see. So if you average, I like median more. So 3,800 for the S&P. So let's see. Index. I'm pretty sure what are we in the fourth? Yeah. Okay, that's cool. We end 4,700. The average prediction was 1,000 points less than where we ended from last year. So cool. Just cool. So basically last year it was everyone was just like the recession was inevitable. Not me personally. I was buying like crazy last fall. So cool. Recession bears. Everyone was a recession bear. I don't know what you want to call them that. So there you go. That's the one funny chart. All right. Anybody have any questions or I don't know. I haven't really said anything question related. So one hell of a year. 2024 is going to be even more lit. Oh yeah. I don't think there's a bigger rationality in the retail investor community following the herd. Interesting. Job market is stable. Still can't really find good help where I'm at. No, that's that. I look at the job market. It's just like labor is such a problem. Like I see surveys in New York State, and one of the top two or three always problems that when we do surveys of employers is they can't find people for open jobs or qualified personnel. It's always the same thing. Can't find people, and you can't find qualified trained people. So it's the never ending problem in the U.S. right now. Population's getting older. And we have a booming economy, and you can't find people to fill these positions. Um, so that's like some of this automation might scare people with AI, but it's actually going to be great for America because you're going to take people in lower quality jobs. And I know you probably don't believe this. I've in my field, I've seen some people are not intrinsically motivated to go to college and become professionals. They just want to make money to go home and pay their bills and do video games. So if they can't find those jobs, like if those jobs are taken away, though, now they have to go back to school, not because they want to, because they have to find a job. So they will go to school as long as like we help them, the government, you pay for some training for these people, not a college degree, but you do move people up. So people are better off. I mean, working at a warehouse pays better than working at like a Sears Roebuck store. So, you could say those people are better off. Or like toll booth workers are gone. Is the economy going to miss a toll booth worker? No, they're going to move to something else, like higher up the chain, I think. Same with, I'm not concerned about fast food workers either. That's a ways away. Automation of that. Marcus Wary. Okay. Did Paul make a prediction? I Googled every type of I Googled everything I could think of or searched their channel. I couldn't find anything specific. Um, I mean, I'm sure he puts out like perma bear doom and gloom videos every like month. So I'm sure he put those out as he always does. I'm pretty sure he made a prediction. Yeah, it's tough to search YouTube like a year back because you'll search a term and then it just gives you like the more recent stuff. Um, When do you think EM will capitulate on Nvidia short? He won't. He said he's going to die with it, or he's going to go down with the ship. Paul will. He's going to ruin his whole family and his brother's life over this stupid short. Boomer news with Dan Wesson. Yep. All right. So this is I pulled some stuff. So this was JP Morgan's wealth management. So this was an article this year. They talked about what they got wrong about last year because I couldn't find last year's prediction. I don't know where it went. So they talk about what did they I give them credit because they actually are talking about what they messed up. I tell you, I can't find like I looked at some of the other places I know do predictions, and it's like I don't know where the hell the articles are. I mean, maybe they archive them or something. I just haven't that much time. So let's see. So what did they screw up? They said We believed this was JP Morgan's wealth management. We believe a US recession was more likely than not. So a lot of people were like this. We were too pessimistic. Yesterday, the final release third quarter showed the US economy grew at 5.2% annualized pace. That's an amazing year. 5.2% for the US, amazing. So the best mark since fourth quarter 21. The US consumer has been doubted for the better part of the last 18 months, drove the first quarter. Everyone thought that Americans would just stop spending because inflation and the CPI went up. Um, kind of like there were companies definitely hit by consumers pulling back from spending. Dollar General commented on it specifically. So yeah, it definitely was mentioned. Target mentioned that people were buying weren't buying like the lot. They had this huge glut of inventory at the beginning of this year. I don't know if you remember, because they expected that the continued boom of like furniture and all this other stuff, and then it kind of came to a crashing halt, which was a big problem for Target. Nike, there was some consumer spending pullback, and their inventory started to like grow and grow because they didn't pull back. They didn't cut their prices, so they had to live through some pain on that. So US economy was more resilient than they expected, JP Morgan. So they show this chart that GDP went up. Another big surprise that mortgage rates did not lead to a price decline in US homes. So this was another part of this year. Everyone just assumed that mortgage rates will go up, there will be this huge drop in prices, like inverse reaction. So what really happened, I've shown in a previous live stream, prices kind of just stabilized. I think they slightly increased in some areas, but prices did not go down for housing. They stabilized or went up in most areas I looked at. So they were wrong on that. And they're not the only ones on that one. A lot of other places I saw thought that 8% mortgages would lead to a crash in the housing market. I never thought that, honestly. I just never did. So new homes have stabilized. Yeah, it has. Starting in October, you could see the data kind of stabilize on houses. It wasn't getting worse and worse in October, which is kind of where we are right now. It's not getting better. It's just kind of flat. Um, let's see. We were even more negative on Europe 1 year ago. To be fair, things looked very bleak. The continent was heading into first winter without natural gas. Inflation was soaring. However, warm winter and resilient services helped the U.S. economy avoid its worst. So Europe didn't get crushed like a lot of people thought. Poland had a really good year, actually. I was talking to Strongman about it. Poland was one of the best performing markets this year, actually, which is kind of funny. I think the UK did well. So yeah, not as doom and gloom as everyone thought. Now, here's the funny part. A lot of the people that you would read would say the US was recession bound, Europe was going into an energy crisis because of Russia, but then they would say at the same time China was going to have was going to be back in growth mode. These predictors, so they were basically wrong on all fronts. 0 for 3 on that. So let's see. What did they say about China? We were cautious on growth in China despite surprising exit from zero COVID. Growth generally sputtered all year given the slow motion deleveraging taking place in the property sector. Yeah, okay. Growth resilient. So, all right. They don't have a prediction there. So where were they right? Yeah, we don't care where they were right. Doesn't matter. I'm not going to read that one. And mid-year, I don't think there was anything that interesting. Okay. Let's get into the fun one. I don't want to wait anymore. So here is the best one. Unsurprisingly, who would have thought that the worst, like the most terrible prediction I saw was from Motley Fool? I mean, I guess it just writes itself, right? Maybe they were just doing this on purpose to troll us. So 12 stock market predictions for 2023. Motley Fool, right at the beginning of the year. Okay, let's see. Maybe someone can keep track of them. So we're still in a bear market by year end. No, we're not. We were sluggish for a little while, but then after the regional bank crisis ended, we were in friggin' boom mode. I think like pretty much when Nvidia had that explosive growth, I think it was it late May or June, their earnings that point, that kind of kicked off the AI and the boom market and the tech sector. So they're wrong. We're not in a bear market right now. Their prediction number 2, the US will fall into a recession in 2023. No, we did not. 0 for 2. Not looking good, Motley Fool. Number 3, the interest rate yield curve will reverse its inversion during the second half of the year. I'm not going to pull this up. I think it's trending that way. I don't think it's reversed completely, but I think we're trending to reverse it. US inflation rate ends the year far below expectation. Let's see if there's a bright spot possible in 2023. It's that US inflation could quickly back off the 40-year high of 9.1. That one's okay. Let me pull, hold on, inflation. I'll pull core inflation. Hold on. Okay. I think this is core inflation. I pulled like 3 of them up. So, let's see. I mean, yeah, I mean, we're not like doom and gloom anymore. It's not great, but we're away from 8-9%. Now we're back to like 3-4. So, not bad. Um, so I give them half credit on that one, maybe. Number 5, healthcare. Oh my god. I did not pre-screen these. Healthcare will be the top performing sector of oof, oof. Yeah, that did not work out in their favor. Where is it? Here we go. Healthcare. No, actually, it was pretty much at the bottom. It was uh fourth worst of the sectors. So that is a negative on that one. All right, what we got here? 6. Da, da, da. Gold mining stocks will be the best performing industry. Did Peter Schiff sponsor this article? I don't know. So there's another nope. Not even close. I'm not even going to go look at gold. Let's not even bother. We just know gold mining stocks did not perform the best in the market. Okay, energy stocks will struggle following a strong year. Um, Half credit, I think. I There were periods of time this year where energy did well. Um, and there were so kind of okay year, I would say. Let's say okay year, not strong year. Uh, oh no. Okay, this is this is the worst prediction so far. It has to be. Apple will fall below $100. Oh my god, why did they think this? Um, Apple fell below 2 trillion valuation and touched its lowest point, 125. Yeah, it started off pretty low. In 2023, I'd look for Apple to return to double digits and fall below 100. Okay, why? Apple's service segment remains strong. Companies accounts for a majority of smartphones. Apple's growth rate is slowed considerably. It yes, definitely has. iPhone 14 offered a lot of differentiation. I mean, whatever. Um, Overseas supply chain challenges. But that's a temporary concern. What a clown show. Seriously, that's just a temporary. You don't think Apple can deal with overseas supply challenges temporarily? The largest company in the world could be playing a role in the slowdown. I mean, they had a slowdown and the stock still didn't go not even close to below 100. It's double that. Rapidly rising interest rates means Apple lost access to cheap debt. Oh my god. They don't need cheap debt. They have to sit on a pile of freaking cash like no one would believe. Okay. This is clown level. Whoever, are you kidding me? Like, oh, yeah, I didn't even have to know what happened this year. I would have laughed at this if I read this. Okay. Toyota will close out 2023 as the world's largest automaker by market cap. Wow. Not even close. And I like Toyota, but like I would never have said that. Oh my god. Not even close. China will vastly outperform the US. Oh wow. Wow. Really? The Chinese. Okay. Let's not even look at that one. That was not true. 11 US home prices fall. Here's another one. Everyone thought that housing prices were going to crash this year because of mortgage rates. Did not happen. So wrong. Financial crisis will unfold. Best guess subprime. Okay, he's right. Yes, regional bank financial crisis. Yes. So I'll give him credit for that one. He did get it. So there you go. There is the Motley Fool. So what do you get? Like 3 of 12, maybe 2.5. Oh my god, Motley Fool's first thing. Yeah, number 8. That is hilarious. I can't even believe that. That's the worst. Was that the Apple one? Yeah, jeez, that's the worst one. Who would have thought that? So otherwise, okay, let's get into this. I've already covered this. Michael Burry was a clown, and he's been a clown most of his investing career. Again, I've said this before. He was right once. He was right once. Okay. Let's just give him credit for that one time. Every other prediction, he's been wrong as far as I've ever seen. So here we go. You want to see more? He said, and someone archives because he deletes stuff. So there's an archive of Michael Burry stuff. So he said sell at the beginning of the year. And then 2 months later, not even, I was wrong to say sell, okay, and then he started shorting the market again after he did it last year. He's lost on all these shorts that he's done. I've covered this before. So, oh, typical Burry. And I don't think there was much here. Yeah, he shorted the market, got his cheeks clapped. So, there you go. I don't know why you would short the market. I really don't. Like, the long-term trajectory of the US market is up, and you're gonna go against that for an entire year, like, won't work. But so there's him. Peter Schiff. Okay. I had to someone said Peter Schiff. So I don't really follow Pete. I barely know anything about him other than he likes gold. He doom and gloomer. So let's see. This is an article from beginning of the year. Peter Schiff's predictions for 2023. So let's see. I did not look at any of this beforehand again. So Peter Schiff predicts consumer prices will continue to rise. Okay. I mean, yeah, halfway through the year they went and they topped, and then now they're trending down. So he gets half credit for that, honestly. Next one. US dollar will continue to fall. No. We will continue seeing falling asset prices. Let's see. What is he talking about with this? Stocks? Okay. He's wrong. Okay, that didn't happen. We did not go into recession. The economy will continue moving towards a recession. Wrong. I mean, you can't even debate this. Did not happen. So, what are the primary drivers behind economic decline? This is what he's predicting. More inflation. Okay, we had inflation, still didn't cause a recession. Rising taxes. No, no new tax policies I'm aware of. Further business loss. That's very random of thing to say. Similar to inflation issues experienced 2008. We're comparing now to 2008. Like, okay, that was caused by a very specific situation with housing, subprime mortgages, and then these package mortgage instruments that were being traded. So why are you comparing us to 2008? So what is the comparison to what happened then? Probably doesn't even detail it. Whatever. I mean, there's no what the hell correlation 2008? God. More Americans carry card balances month by month. Yeah. It hasn't mattered though. Americans use credit card. It's like, you think that's the recession cause? Credit card debt. Okay. So not yet. What does he recommend? So of course, who would imagine what he recommends? Cutting down on your debt. I mean, you should always cut down on your debt, and investing in precious metals. Okay, we're investing in shiny rocks, apparently. Cool. He predicts the economy will significantly worse in 2023 and 24. Patently false and wrong. Okay. Inflation can significantly impact value of currency. It doesn't impact precious metals. Okay. Again, we had inflation, and still equities outperformed your shiny rocks. So you're wrong on two fronts there. Cool. These guys are great. I love these perma bears. They're entertaining me. Okay. What do we got? Oh, God. I'm late. I have failed, Dan-san. Oh, you're all right. I forgive you. Anyone is for? Who's this? Oh, I'll pass. You have failed yourself. Shifty Pete is short gold. Is he? I know he's a gold dude. Like, he runs like I've seen he has ETFs, and they're terrible performing. I know that. That's more shiny metal rock. That's right. Shiny metal rocks. I don't understand. I mean, if you want to have some gold, like, you go buy some gold from Costco, so be it. I mean, again, it's like, if that's like 5-10% of what you own, so be it. I mean, I've got some whiskey I kind of collect. So you can have collectibles. I mean, I consider shiny rocks a collectible, honestly, or in the same category. So here we go. I'm gonna have to go through this is like 20 pages. So we'll go through it fast. So this is Comerica Wealth Management. So their 2023 market outlook last December. So they envisioned the environment of moderating but persistent price pressures will keep monetary policy on a steady but less aggressive tightening path. I mean, they were on a pretty aggressive tightening path, I thought, until I have to look at the chart, like October. So that's not really true. Let's see. A few scenarios could result, yet our base case is mild recession. Again, another place calling for mild recession or hard recession, whatever you want to call it this year. So what other parts? So this was their prediction for the funds curve. Not accurate. Rates have not gone back down this fast, so that's not true. So they missed that one. We're not going to bother with their economy predictions. Fixed income, I don't care. Equities. So we'll go to this part. Equities market struggled. Let's see, where were their predictions? Here they are. For a classic, okay, this is when they were really wrong. For a classic double bottom to form, we look for the $3,500 or 3,500 range to act as the next major level of technical support for the S&P 500. Never got back to that in 2023. So they thought it hit 3,500. I think it was last in October 2022, and they said it was going to hit it again before it like went up again. So didn't happen. That was not right. So again, their base case was a mild recession, first half of the year, full employment, household cash, solid corporate balance sheets can keep things propped up. October lows will be retested. Again, there was no we didn't retrace back to the October lows. That did not happen. All right, conceivable. I'm not going to get into that part. Mild recession. Whoever writes these things are very boring. Yeah, so it is important for investors to remain cautious. This is what sucks about these things. Like if someone read this and followed these people, so they wrote this last year. So I'm assuming they wrote this and gave this to their wealth management company. They must have given this to their clients. Portfolio positioning. So this is probably the most important part. Okay, what are they telling me I should do? The mild recession scenario, as well as possibility of a hard landing scenario, it is important for investors to remain cautious and not get too aggressive during bear market rallies. So they've scared. Okay. So the first thing they tell me is I should be scared and concerned. Okay. We anticipate heightened market volatility. I should point out the VIX has been going down all year. So it is not actually heightened market volatility. It's been decreasing volatility all year. They're wrong. In the months and quarters ahead until the market gets comfortable with potential for peaks in the market interest rates. That's a meaningless statement. Let's see. In position equities within a diversified portfolio, we continue to favor. Here they go. Here's where they really screwed. I'm going to highlight this. This is where they screwed their clients. If they followed this, if they followed this outlook and actually made decisions based on it, we favored value over growth, is what they said. So if somebody put all their growth investments into value, they got wrecked this year. All right. They got wrecked because I can go look, my SCHG is up almost 50% this year. All right. And if I looked at the equivalent value product from Schwab, I'd be surprised if it even went up 15% this year. So this alone right here, they hurt this statement hurt people, which is such a shame to make statements like this. And people probably made bad decisions based on this. So there you go. Let's see. Okay, I just highlighted globally. They basically predicted the whole globe was going to be a giant mess, except for like China. Which why do they always freaking single China? So basically, they thought it was doom and gloom for the whole world because Ukraine, the energy crisis with Ukraine, natural gas issues with Europe. That was what was happening last fall. So they just assumed that would run for a long time. Turns out that was only a temporary situation. Honestly, I didn't think that was a long-term concern. The U.S. has the facilities to provide liquefied natural gas to Europe. I didn't think it was that major of a concern. I thought it was temporary. So they thought financial markets would struggle around the world. Okay. So let me pull this chart. So here's some of the markets outside of the US in 2023. So they said doom and gloom for the world. Poland, best stock market index in the world. Like The bigger ones, not the smaller ones, but like Poland, 43%, Greece, 40%, Italy, 33%. So these predictions of doom and gloom in Europe, nope, didn't happen. I'm sorry. Developed world, nope. A lot of countries did actually pretty well. France, 20%, Germany, 20%, Sweden, 18%, Netherlands, 16. So Japan had one of their best years ever. Wrong. So wrong on many fronts. So here we go. And these are people, this goes to clients and they made decisions with their portfolio with this company, which, so this is like the most impactful thing I'm showing you actually. The other stuff is just like analyst opinion. What else we got? Some of this currency commodities, I'm going to bore myself to death. In 2023, we look for the resumption of US dollar strength, renewed bid for oil as geopolitical tensions. We have been producing more oil in the US, so they're give them credit on that one. And then they go commodities, including copper and gold, are like to gain traction until Fed tightening. Copper did dip this year and it's rebounded. I know. I don't want to go in the chart. Give them credit for that. So there's these people. So other than that, we have, like I said, VIX. When they said that the market would maintain volatility, it actually is not. So here's the VIX. You can go look. So nope, sorry. So here's S&P compared to the developed world. That doesn't tell the whole story. So I mean, this was this was the year of this basically. So the Magnificent Seven. Now I know some retail is like, okay, why don't I just buy those 7 companies? Some of you out there are thinking that probably, or just buy tech because tech went up. And I would caution you against going against your, or don't buy into green and sell red. Okay, that's a terrible strategy. Like you're gonna screw up. And I've seen it time and time again this year. People, retail investors, buy things that go green and sell things that go red. Okay, they tell me they're long term on something, but that they, I can only assess what you're doing. If you sold SCHD and bought QQQ this year, you did that to yourself. And who knows what next year will hold. Um, but if you flip flop like that, I saw some YouTuber today. She had VTI. She sold VTI to buy VU because VU did better this year because of the Magnificent Seven. So you think people won't do that stuff? People do it all the time. So if you're doing that, please don't. Just stick to something and just don't stop. So Dan, can you be a year to date, bro, and share your year to date? You don't have to, but just curious in case you want to. I mean, the problem, I'm not going to show you my brokerage account. So I mean, all I'd show you is like a spreadsheet. And it's like, I don't know what value that would give you. It might be better if your account for currency. Yeah. Sell VTI for VU. Oh God. uh so what else we got? Investment. This was a Reddit thread. Are investing. What is your investment thesis for 2023? Okay. Let's see if there's any fun ones. So now we're in the retail zone. Let's see if anyone. Okay, here's one. Fuck you, I'm funny. Let's see what he was on to say. Markets will go down 15-20% because rates will go up probably another 25 basis points at minimum. Remain there for 9 months. Okay, this is not right. None of this is true. Markets does not go down 20%. They raised rates actually more than 25 points. They raised quite a bit more than that. There will most definitely be in a recession. False. There was not. When we see historic companies go, we will see a historic company go under by mid-year. My guess would be mainly in the retail. Does that really, like, if a retail company goes under with a market cap of like 8-10 million, does that really matter to the economy of the US? That's just a pointless. This is a pointless statement to make. Housing prices will go down a shit ton. Again, why were people so, there were so many people adamant that this was going to happen this year, that freaking we were going to be in a recession and housing prices were going to crash, doom of everything. No, didn't happen. So feds will cut rates. I mean, the housing prices, I didn't understand that because, okay, mortgage rates are 8%, but then, so the inventory of houses for sale went down drastically and people like me with a 3% interest rate aren't moving. So the supply of houses shrunk. So there's a even if the demand shrunk, okay, the supply shrunk at the same point. I don't know why people thought housing prices were going to crash. I never understood that point, honestly. I didn't think they were going to skyrocket, but let's see. Feds will be cutting rates drastically by the end of 2023. Wrong again. We're not cutting any rates this year. Maybe set up for next year. We'll see what they do. They've indicated going down. Crypto will go down another 30-50% across the board as people continue to pull money out. Ooh, he was wrong on that. It's doing well now. So, um, let's see. I think that's funny enough. Oh, this one? My investment thesis. The downturn may continue or get worse. No. Dividend paying securities are good for bear and sideways markets. But we're not in a bear market, and dividend investments didn't do as well as tech this year. REITs, for example, tend to be oversold and provide. Okay, that was a bad move. That's you should have bought REITs depending on your risk tolerance. So, like, I think I mentioned this on Fabio's stream. So they bought KRC and I bought Vornado. It's almost it's a different play on the same idea, but like you could, our KRC was just saying the valuation got destroyed and unfairly. For me, Vornado was just a matter of like it was just at some point New York would come back, and I live near New York, so it's more comfortable for me to keep track of that news. But it was almost like looking at New York City REITs as like preferred shares. Like the valuation is fine, but the question to me was more, will they survive? So when I looked at it, I'm like, I'm not even valuing necessarily the stock or how underpriced it was. I was just like, will Vornado survive? Because I knew it was going to be rough for like 2 or 3 years possibly. So I picked them because they had more diversified revenue sources than some of the other REITs I looked at in New York City that were just like straight up office REITs like SLG or Empire. So I'm not exactly sure the KRC thesis. Not, I'm sure they weren't thinking that way, but so far I'm going to double my money on Vornado. I'm pretty sure it might take 2 years, but that's fine. I'm already halfway there. Um, let's see. Oh, this guy. China opens up for business, causing a strain on energy commodities. They did not open for business. Russia and OPEC cut production at the same time. Interesting. They OPEC cut production. Yes. Okay. OPEC plus. I don't know if Russia cut production. Jay Powell will have no option but to raise rates to battle inflation brought on by energy. He did not raise rates because of energy. That's not true. Apple ends 2023 at, oh my God, at $98. Another one. What is with you guys hating on Apple like this? Jesus Christ. And oil will become upper flat. Oil has not been flat this year. I would not say that. Airlines start losing money. Airlines always lose money. So that you could say this statement any year. Tesla under 100. Nope. ARK will be at $15. No, ARK has done well this year. Coinbase, $20. This guy's totally wrong. Unemployment, 7%. Not even close. China continues. Okay, China buys gold. Cool. Wow, this guy's, man, if this guy's been trading on Wall Street bets, he's probably lost all his money at this point. So there. All right, I think that's about it. Anybody have any I guess reflections of this year? Let's see. Sell VTI for VU. Absolutely. You know, just every day look at the chart. And then whichever one's green, you buy. And whichever one is and whichever one's red, you sell it. And you do this every day this year. All right. I guarantee you'll lose money. So can you make a prediction on Kevin's plan to make $1 billion company? Wait, what's going to be the $1 billion company? Is it the house hack thing now? Or I don't know. I'd have to think about it. Wait. He made a video on how he will do it. Oh my goodness. I have Joseph Carlson. Okay. I have Joseph Carlson's prediction video from last year. I don't know if, do you want me to play that or just cut it? Because we're at 45 minutes, I guess. Bed Bath Beyond has gone under, so the US is in recession. I guess it's like, yeah, a retail company goes under. That's not, if you're saying a historic company going under, I'm thinking something big. Like 3M. If 3M had gone under this year, I would have given him credit for that prediction. Thanks for this follow. We'll see a prediction. Okay. His phase 2 and security licenses. I'll have to. I don't know. I didn't watch what he said. I don't know. Maybe the dude should just stop losing money on investments. Because I think he got cut in half last year at the beginning of the year. As I've said, I think he lost half. I think he went from 40 to like under 20, and then he bought in at the wrong time, right at the beginning of the year. He bought in Tesla at all-time highs, as I've shown. He bought back in after he sold it all at like the highest price it's been since then. So, and now he's like doing stupid shit like shorting Costco. I mean, whatever. Play the bubble sen. Okay. I don't understand. I'd have to see meet Kevin. I'd have to see. I don't know what he's taught. What he did. Okay, hold on. Nope. All right, we'll play this. No, that's not the right button. I have to switch to the tab view because then you can play audio. There we go. If you're showing the other way, you can't play audio. All right. For the record, I'll give him credit because I can't find any other market prediction videos. So if anyone did them, they probably deleted them because I literally just searched market prediction. I couldn't find anyone else that had videos like this. So give him credit that he left it up. All right. So I don't know. Again, I watched this when he did it originally a year ago. I don't remember what he said. But I'll skim through it because it's 30 minutes. So
days of inflated valuations come to an end. Seeing the days of being able to throw a dart at a random group of small tech companies or small market cap growth companies and have them randomly do really well for no apparent reason, those days are gone. And not only are they gone, they're not coming back anytime soon. I don't see the days of the random DoorDashes, Pelotons, Tattoo Chefs, Palanters, Teladocs, these type of companies making back some marvelous recovery over the next year and going back up to inflated valuations. I don't think that's going to
So Palantir did so, but I think we know what happened. Tattooed Chef
happen. I think these companies will likely continue to trade down until their fundamental.
I give him half credit for this one because for the most part he's right. But if you say all, some of them didn't keep trending down, so he gets half credit on that one. All right, we'll go to the next one.
And we have the Cisco's, Home Depots, we have the Walmarts and Costco's, right? We have high multiple companies that are reliant on fast growth. We have lower multiple companies that are reliant on stable, predictable cash flows. And these are two different baskets of companies. Now, I think that in 2023, the value companies will outperform the growth companies. I think they'll do it once again. They did it in 2022. If we look at the results here, the US dividend equity ETF, which is more of a value tilt, these are companies that have paid growing dividends for over a decade, 10 years plus.
He could not have been more wrong about that. He could not have been more wrong. Oh my God. Oh my God. Okay. So I'm looking at, so Schwab has, they split, I talked about this in the SCHG video. They have that the Dow Jones 750 is their large cap. Then they split it into value and growth. So this is just based on Dow Jones' split of value and growth. Let's go with that. So the SCHG this year did 51% growth. Okay. The value side of the large cap that Schwab does only went up 6% this year. So, which is SCHV, if you want to go look. So like I said, they take the 750 from the Dow Jones large cap and they split it according to their 6 criteria that I did in the video. There's like 250 in SCHG and like 500 in the value. So he really got that one wrong on it. I should do a video on value ETFs at some point. I hate value investment ETFs so much. I think they're clownery. There's no reason to buy a value fund over just buying the entire basket. At least with a growth or a growing dividend or a growth fund, you can at least argue there's outperformance potential long term. But value ETFs are trash. Like, stay away from them.
Many of the companies, the Home Depot is going to be the case. Prediction number 3 is pretty simple. I think that headline inflation will be below 3% by the end of 2023. It's currently at like 7%. So this is a pretty bold prediction. I think it's going to be cut in less than half by the end of next year. But I really think this will happen. When I look at it, again, I'm no economist here. This could go either way, but
I give he's close enough. So yeah, it did. It went from 9, we're down to something in the 3-4 range. He got that one right. I'll give him credit for that. Next one.
a hair after a tough year where your stock is down 69% year to date. That's tough. And I genuinely the industry that the company competes in, which is the auto industry, cars. I know that the argument it's unlikely. Over the long
he was really wrong on that one. Tesla has almost doubled since this prediction because it was 123 when he did this. It is what it is with Tesla. I'm not someone to say it's going to go bankrupt. I just state that Tesla has major concerns as they get a larger car fleet with more batteries out in the public. They're going to come into rough spots like all car companies. But to say that, I don't know. That's a weird prediction. A lot of people were saying that at that point, doom and gloom. So he was wrong on that if you're keeping score. So minus.
It'll generate $2.5 billion of free cash flow. So let's go ahead and look at a couple things here. Netflix has been one of these companies like Tesla that's had a very tough year. The stock price is down 51%. So it's doing slightly better than Tesla, but it's doing worse than most companies. And this is one of those stocks that you have to make a distinction between the stock and the company. The stock is highly unpredictable, highly jarringly volatile. I don't think that most investors should own Netflix. I think it's not suited for most people's investment styles and their tolerance of volatility. In my case, I've invested in this company. I'm going to be holding it for like 10 years. I really plan to. I think it's going to be an inevitable winner in the long term. But I'm not shocked to see a lot of volatility because the story and narrative has changed dramatically. The beginning of the year, this company had 2 massive drops. If we look at it, this is where Bill Ackman was buying into the company. He's like, I'm going to buy into the dip, right? We had this massive dip. He's like, Netflix is a great company. It has year by year. We know that this company in 2014 to 2019, they just had growing negative free cash flows. Yep. And the big bear thesis was this company will generate $2 billion of same thing to a much bigger extent.
Okay, I'll give him credit for this one. He's right. He's right on this. They did turn around their free cash flow negative, dilemma, and they're doing well with it. And we know now they are the winner of the streaming wars. I mean, it's decided at this point. The players are on the board. Netflix won. And then the people at the bottom are going to merge or they're in trouble. So, yeah. Let's see, what's his next one?
The reason that I make an exception for Texas Roadhouse as a sit-down restaurant, that type of investment in a tough economic cycle, is because of some particular specific characteristics about the company. When you look at different companies in different industries, in every industry, even tough industries like sit-down restaurants that typically do not do well during recessionary environments, there's usually a couple companies that really shine. They outdo the rest of the companies. They outcompete. And I think that Texas Roadhouse will be one of those companies. If we look at the actual data here, we have Texas Roadhouse's earnings per share per year. And notice how there's really no huge negative impact in 2009, no big negative impact in 2000. Both recessions, this company basically sailed through. And I think the reason is not random luck or mistake. I think it's because of the value proposition of the company. Every restaurant gives their customers a value proposition. It's how much food and how good of service you get for the price you pay. Texas Roadhouse does not strive to be the most premium, the best steak on the market anywhere in the world. I'm sure there's some stuffy restaurant that you can go to and get your $70 steak. That's not what this company is. What it is the best value proposition. You get a pretty good meal. It's a decent meal, and you get a lot of food for a really decent price.
Okay. Texas Roadhouse did outperform the S&P 500. So he was right. Yeah, I know some people hate this investment. He was right. It did. It made 32%. SPY made 24.5 or so. So he got it right. I was with him on this. So when he first brought up Texas Roadhouse, I think it was in 2022. I'm trying to remember when I was in his Patreon. I liked it a lot. And I got in, I'm just pulling up the chart. I always memorize the prices. I just don't memorize the dates because I got in like mid 70s. So I got in like fall or summer of 22, And I was like, okay, I like the financials. And then it ran up real fast to 100. At 100, I didn't really care for it, so I got out. I like this investment. I think he did a good job with Texas Roadhouse. This is his invest. I've never heard anyone else talk about it. So he found this. So good for him. All right, number
that
7.
Google's catching up, Microsoft is catching up.
Amazon
We have
will
Cisco
become
and
the clear
Alibaba
leader.
Cloud, and all these companies are catching up. And the cloud is really not as good of a business. It's basically a commodity, and any company can do it. And I think we're going to see a bit of a reversal of that growing story. What I've seen here is data that shows what's going on with these cloud companies. We can compare, for example, Google against AWS. Google's in 3rd place. AWS is in 1st place currently. We have Google Cloud Pro and their amount of commitments over the past 2 years, and then we have AWS's. Commitments are the amount of deals that they've made with companies that are signing a contract above 1 year. It's kind of a guidance of future revenue of the cloud business. And we have in red AWS's commitments. We have in blue Google's cloud. Now, what you can see here, if you look closely at this chart, is that in 2021, Google Cloud was growing theirs. And then when it came to Q4, their commitments basically just flatlined, completely flatlined all throughout 2022. So even though Google Cloud is growing revenue, they're not making as many commitments. They don't have as many contracts growing above a year. They're basically just using their current customer base and growing with that customer base. AWS, on the other hand, you can see the difference in the trend. This is the tale of 2 cloud companies. AWS is likewise grew in 2021, but in 2022, their commitments also continued to grow. AWS is more effective at growing their amount of contracts. And that's because of the inherent advantage of being first and having the already biggest, most established, most known, most used platform. There's big network effects to it. AWS is benefiting from that. Now, we can also involve Microsoft here, because a lot of people think that Microsoft is just going to crush AWS, right? This is their wheelhouse. They're the tech company. They have all the connections with the big tech companies. And they're basically the only company, by most investors' thoughts, they're the only company that could really surpass AWS. If we look at this report, it goes over that Microsoft doesn't break out Azure's financials in dollar terms. So Microsoft just doesn't let us know what's going on or how much money they're making with Azure, their cloud program. Nor does it break out Azure in its disclosures of revenue, backlogs from enterprise software deals. So while we can see this chart here, the commitments from both Google and AWS, we can't see with Microsoft. Now, they technically report it, but they just include a bunch of other stuff to make it so we really don't know what the Azure business is doing. And that's a common strategy of obfuscation. They're basically trying to intentionally make the data difficult to understand. They said that all of their cloud stuff, everything that has anything to do with the cloud with Microsoft, totaled 180 billion. That's more than AWS at 105 billion. But again, AWS is just AWS. It's not everything they do in the cloud. This is more than just Azure, this 180 billion. So we don't know how much the Azure part is in this 180 billion. And then there's another entire article about how Microsoft intentionally makes it as difficult as possible to determine their numbers. And on this subject, there was a leaked report from Google just recently that Microsoft's cloud business isn't quite as good as investors are giving it credit for. They said that it's not as big as investors think it is, and it's actually not as profitable. In fact, they believe it's losing money. This is Google's internal report. Google says that their numbers show Azure had roughly a $3 billion operating loss in fiscal 2022. Now, you can debate this. There's people saying this is just jealous Google trying to tear down one of their competitors. But I don't know. If Azure really is losing money right now, then their cloud business is not nearly anything close to what AWS is. AWS has like 30 to 40% operating profits. It's highly profitable. It's a cash generating machine for Amazon. And this is where I think that there's a tell here. There's one company that gives the most clear data about its cloud hosting, the most transparent, clear data. That is Amazon. They show what's really happening with their cloud business, the growth rates,
Okay, I was with him. I'm like, he's on it. He's right. And then he's that last statement. So no, Microsoft was the biggest winner this year in cloud. I mean, from looking at market share data, Microsoft grew their cloud business huge. Yeah. So sorry, Joseph. AWS grew. So you're right. He was right in that part. They are the leader. Microsoft's nipping at their heels real fast, though. All right, Legacy. Ooh,
think it's going to hamper these businesses' growth. Warner Bros. Discovery loses $2.3 billion and hints at imminent price hike for HBO Max. They can try to hike the price, but I think it's inevitable. I think they're going to cut budget. They're going to cut their content spend. They're going to fire employees. We have Paramount Plus here. Latest report is they're growing okay. That's fine. They're gaining subscribers. But then we have the numbers here. Adjusted operating income before depreciation and amortization showed a loss of $343 million, up from a loss of $198 million. So even as they're growing, their losses are increasing with streaming. They have not reached scale. We have Disney here. This company, it says right here in the headlines that they may have to cut costs as streaming loses money. How much money is Disney Plus losing? Well, this last quarter, their run rate right now is $1.5 billion. Since Disney Plus started, it's lost over $8 billion. It is a money-losing entity right now. It's not even really close to profitability.
Right.
In fact, if we look at this across the board.
And that was the biggest problem with Disney. It's why I would never have bought them before. Basically, Disney was taking all the revenue of their very profitable businesses, the parks, the cruise lines, the cable. They were taking all that beautiful profit and just dumping it in this black hole that was their streaming service that just was never-ending pile of money burn. But they've turned the corner and said they're not going to do that so much anymore. That's why I was like, okay, I like Disney now. That was part of why, not the whole reason. But he is right. And I've known this for like Warner Brothers and Paramount. I mean, I'm not calling them bankrupt. I'm not saying they're going to go bankrupt, but I'm like, to say that they were going to like grab huge market share, they have so much debt on their books. It's just not a tenable situation. Between Warner Brothers and Paramount, you're talking like 60, maybe $70 billion of long-term debt if they merged. It's a disaster. So I don't know how they even recover from this. It's not even like they can sell assets to pay that debt off. I don't see what they can do to maintain, unless they get the Carvana dude that managed to redo Carvana's debt and cut some of it. I don't know what else they do. They're just never going to have the cash flow to pay that debt off. It's just crazy. So
board, all of these streaming services, these hundreds of millions, but there is predictions and concerns. And I even made a video about the subject, about this pretty cool AI chatbot that can do things like write codes and lots of different, or any similar AI bot. It just lacks. And I think that's something that people aren't going to like. So in my opinion, I think in 2023, I think we'll look back at the threat of ChatGPT and see that it really was never a threat at all. And finally, prediction number 10, I think that in 2023, Microsoft will be able to successfully close the acquisition. I think
so. I mean, so what was this prediction? Let me read it. ChatGPT won't hurt Google. He was right. It did not hurt Google. And I'm not a Google investor directly, just through indexes. I don't really have a strong commentary on Google, but I wasn't that concerned about their AI struggles with it, honestly, because that's not what their revenue is, primarily. It made sense that Microsoft could be the first ones to monetize in some way, shape, or form AI, because they could just, they had all these prepackaged software services already, and they just bolted AI onto their pre-established like network of, software they offer you that you pay for already. But Google, it's like Google didn't have that. Google's business is different. So Google has to figure a way to convince people, like advertisers, to, monetize like they did the internet. And my understanding, like, it took a long time to like monetize advertising on the internet with Google. It took many, many years to figure out, like, how do you charge advertising companies? Like, what's the basis? So we're just at the beginning of how would you monetize AI in an internet advertising era. It's going to take years and years to figure this out. So Microsoft had the setup to benefit immediately from AI. You could see it in the stock, but both stocks did well this year. So, so Joseph was right there, I would say.
They'll be able to buy the company because, frankly, I've looked over the complaints of the DOJ, and I think they're very politically motivated. I think when it goes to, and it's distracting them from working.
They did win the lawsuit and they bought Activision, but what I'd said when it was going on, I'm like, they're not going to buy the whole of Activision. I'm like, they're going to have to cut a deal, was what I was thinking. I was thinking either the EU. I thought the UK was going to be the one that was going to give them the most crap about that deal, which I think it was. But they had to I think they had to sell off part of their business of Activision. I think it was the software, like their website service where they sold the games. I'd have to look it up. They did have to sell a very small portion of the business to make the deal go through. And but really, Activision's about, it's about the Call of Duty licenses, right? It's not about anything else. So there you go. Joseph Carlson's predictions. I would say he did pretty well, actually. I didn't keep track, but I think he did better. Let's be real. He did better than the professional guys the other people, the CFA, the wealth management service. I'd say he predicted 2023 better than they did overall. So you take that for how you want. Um, let's see. Last comments. Oh, we're an hour. I didn't think this would go an hour. McDonald's better than Texas Roadhouse. See, this is like, if you ask me, like, should I buy this restaurant? Would I personally buy Starbucks or this or that long term? It's like, I got McDonald's and Pepsi. So like, I had Texas Roadhouse. I didn't intend it to be more than a swing trade. It was kind of just something I might hold a few years. I'm kind of set. I really don't particularly want any restaurants more than what I have already. Pretty happy with what I do. Predictions have been fairly decent. I think he did pretty well on it. I mean, honestly, not bad. I think he got over half of them. I would say over half of them. I would say he was pretty good. I mean, let's face it. He didn't tell you that Apple was going to be under $100 at the end of this year, did he? Like some of those other clowns. So, give him some props on that. Fate. 90s and early 2000 ads were wild. Yeah. There's been other YouTubers much better job of explaining, but it took like a long time, like a decade for like, how do you monetize the advertising of the internet? Like, how did it become that it was about like clicks? There's a whole backstory to that. But it was not an easy process to figure out. I think the same thing's coming for AI. That doesn't mean the stocks might not wait for that to get figured out though. Yay. So that's that. I don't know if I'll do another video this week. I'm not sure what I would do yet right now. I'm not going to do another ETF yet. So I don't know what I'll do next. I'll just wait for something to inspire me. How about that? So thanks for watching. Man, we got up to like 25 at one point. That's cool. Appreciate everyone listening. I don't know. So for new people, like I'm not going to do like specific. If I'm doing a live stream, I might talk about a stock I'm looking at, but I'm not really particularly going to like assess it for you. I don't feel comfortable doing that. I'll tell you what I'm looking at. And I'm kind of pissed off because I'm not finding anything in housing that I think is a good deal. The one I did like was just freaking just acquired. So I don't know. But I'll tell you, the retail investment, I kind of called it. So I thought that as soon as interest rates were kind of at the top, I thought retail was going to be an investment on the board. So I think is this the retail one? Yeah. Wait, hold on. Yeah. The problem is, here's the problem. I'm learning this myself now. The markets are reacting so fast. So like, this is like, I was on this trade like in the summer. I was talking about it, was watching retail. I wasn't sure if I was going to pick an individual retail company like ASO or just pick the whole batch like this. So I was watching, and then as soon as we got a good feeling about interest rates, it was already like too late, which is crazy. Like people just piling into anything that's even close to being an investment these days. So I've got to hasten my pace on my investment thesis now. I can't be so patient, I think, is what I'm learning in this current market. There's a lot of cash just sitting on the sidelines that people are just ready to deploy. So it's a matter here. It's like, I thought I had more time. Like I was right on the thesis, but not the timing. Like, do I want to particularly get into it right now? It's not so appealing right now. But there still could be room to run on this, on my idea. But I think retail is going to have a great year next year. Retail investments, along with housing. I don't know if housing stocks are going to do well, because honestly, a lot of the housing stocks have already run up so damn much that when you do a year to date, bro chart next year, they might not perform well because they've already run up. Everything I look at in housing is already like crazy already. So I don't know. This is going to be an interesting year for investing. I don't know. You can be right on the idea, but not the timing. And there you go. Rogel Gondar. I didn't know this was going. Oh my. Oh, yep. What happens if rates just hold for like 6 months and 20-year inflation hovers? I guess we'll see. I can't wait to see what happens when they do the actual first interest rate cut. I mean, they'll probably do just like a 25 basis point cut, because they started these when they ramped up. The first one was 25, so I think they'll slowly. The first one will be 25, I would bet. But and then what else this year? So seeing what happens when we actually do the first interest rate cut will be interesting. And then along with that, I can't wait to see what happens when crypto ETFs come to be a thing. Yeah, it's going to be an interesting time. You're going to see some crazy shit come on YouTube when that comes, because you're going to have option traders jump into crypto ETFs. You're going to have every company under the sun put out every type of crypto ETF product you can imagine. It's when this comes out, get ready. Wild West is coming back, that stuff. So anyways, other than that, we will see you later. Might do another video this week. Like I said, we'll see. All right. Thanks for watching. Bye.
Thank you for your cooperation. Good night.